Hey, it's Clay at claytrader.com. This will be my top 10 stocks as we head into Monday, September 18th. This will be a technical analysis breakdown. So if you're someone that uses charts within your trading, or maybe just interested in learning more about charts and how they can be used as a tool to help make good decisions as a trader, this would be a video for you. First off, a couple clarifications. Number one, the candlestick that you see right there will be moving around. That is because the market's still open for a small amount of time. But I like to do these videos when the market is still open because sometimes we can capture some really interesting late day price movement. And then second, I'll be using the 30-minute time frame, meaning each one of these candlesticks here represents 30 minutes worth of time. So stock number one here, ticker symbol CGC, staying in the headlines. A lot of people talking about it. But from a technical standpoint, nothing has really changed from a bigger picture point of view. Now, yes, of course, today things changed. There was a gap up. Price came down here. But from an overall standpoint, and this will mean a bit more to those of you that watched the previous videos, the chart is still essentially right where it was yesterday when I was talking about this, in the middle of this sideways channel. Now, at the beginning of the day, no doubt about it, the price did try to break up above that channel right there, and it did. Problem is, could not maintain the momentum. It dropped back below the channel with that level of key resistance at $1.48, and then you can see $1.48 rejected it. So very, temporarily broke above it, but as soon as the price fell back inside of that channel, again, you can see both those situations there and there. The price went right back to acting as resistance. So moral of the story, top of the channel remains at $1.48. And then on the flip side of things, as far as areas of support are concerned, nothing new here to report. Still down there at the $1.04 mark in terms of the level of support on the bottom part of the pattern. But yeah, as of now, the sideways channel pattern remains in play. But these are always exciting ones to watch because it's a very talked about stock right now. And when you have those very talked about stocks in those sorts of ranges, whenever those ranges break, they can indeed lead to bigger moves. Next one, LIFW, big mover today, especially if you like penny stocks, but looking down there at the volume, just gigantic volume today, and a good solid pattern here has taken place. So let's map out a couple of these key levels. First level that I got to think a lot of people are going to be watching moving forward in terms of resistance levels right here at that level of the 22-cent mark. You can see now 3 times, once, twice, and then third time right there. The price has gotten around that area and has not been able to maintain momentum. Keyword being maintain momentum because, yes, right there, to be fair, the price did actually break above it. But as far as maintaining that momentum, did not happen, and now the price has dropped back below it. And as I speak right now, last 30 minutes, you can see this red candle here is forming. But overall, the chart is still perfectly fine. So this is just going to be the top part of the pattern right up there, resistance at the 22-cent mark. In terms of levels of support, let me get that line in play right there, and then maybe make this just easier to see from a pattern standpoint. Let's keep it all the same color. So we have our resistance, we have our support, we have the big upwards move right here. For you golfers, I'll try to make it a little bit more visual, put the golf hole down here. This would be known as a bull pennant pattern. So if you like bull pennants, if you like penny stocks, definitely keep an eye on this one. Next one, NKLA. Talked about this yesterday, drew in the pattern here. And what's really impressive here, I'm going to go ahead and get rid of that level as it's served its purpose for now. But there is a rule in charting which states when levels of resistance are broken and closed above, you want to see them act as support. And going into today, that red line there was a key level of resistance, but the price broke above it. So at that point, you would now want to see it act as support. So from red to green there, and then check out how the price behaved in regards to that level. You can see all day long, the price has essentially been cruising right on that level. And then as I speak right now, you can see last 30 minutes, that green candle trying to make a nice push upwards. And again, trying to bounce right off that former area of resistance. So just a classic example there that you can throw right into a textbook of resistance now acting as support. So keep a close eye on that. With all that being said, if the price falls below that level, does not mean the chart's ruined, because from the overarching standpoint, you still have plenty of wiggle room up above that purple line there, 50 period moving average. Keyword being moving, so as time goes by, that line is going to move itself higher and higher, which is essentially a trend line that draws itself for you. So in other words, as long as the price is above the overall quote-unquote trend line, then the overall trend is still plenty in the bull's favor. So keep an eye on those dynamics. But yeah, nice move today. Got a bit of a pullback, but overall, the price is still putting in those higher highs and higher lows, and that's by far what matters most. Next, AWIN, another penny stock here. Pretty ugly looking chart depending on where you bought, especially if you're somebody that was buying up around this move right here, because the price has certainly dumped quite a bit. But yeah, so ugly from that vantage point. But for those of you longer time viewers, you know what I'm going to say next. But there can be opportunity in the ugly. And the opportunity here that stands out to me, and you got to think a lot of other people are watching it for a couple reasons. Reason number one, it's a 200 period moving average. It's just a very well-known moving average. Reason number two, it's already got a track record right there of providing support. Now, let me be very clear, and I wish I could say trading was this easy. Just because the price has bounced off that level before does not mean for sure that if it comes down there, it will bounce again. But is it at least plausible? Is it at least a rational thought to have? Absolutely. And that's the name of the game in regards to trading. You don't want to be doing just degenerate random gambles. You want to be thinking about things and, putting together trade plans that have some logic behind it. So yes, it has bounced from there before. Does that mean it's for sure going to happen again? No, but it's certainly logical. So if you can honor stop losses and manage risk, then you could be looking at a very nice risk reward scenario. Next one here, AMC. And overall, the chart hung up there above a level that you would want to definitely see it hold above. It means a little bit more to those that have watched past videos. But if you haven't, I have been talking about that purple line there, 50-period moving average, which I've already talked about in a previous stock in this video itself. But you want to see it act as support. I mean, check this out. Power of charts, price came down here, opening 30 minutes. Look right where it found some support. Right at that purple line. Charts really are a valuable tool to use. We have a example of that right there. But you can see right there, held above it, has bounced back up, and it's been maintaining above that purple line. So from a broad standpoint, that's what matters most right now. You just want to see the price continue to maintain above that purple line, and to give credit where credit's due, that's exactly what the bulls were able to pull off today. I'm also going to make an adjustment on this area of resistance, which brings about the question, okay, well, what direction is this adjustment being made? And after today's movement, I'm going to go ahead and adjust this area of resistance up to that point right there at 855, which you can see right there rejected the price, and then there rejected the price. But you also notice that I adjusted that resistance in the upwards direction. And assuming you're bullish, whenever levels of resistance need to be adjusted upwards, that is always a good sign. So those will be the two main levels headed into next week, that 50-period moving average key level of support, and then $8.55 key level of resistance. Real quick, want to take a break and personally invite you to get signed up for this free live online web class that I'm offering next week. So if you've been enjoying what you've seen and you want to learn more about this tool, how it can and should be used to build consistency and manage risk, then definitely get signed up for the free live class. If you're watching on YouTube, there's a link down in the description box, or if you're watching at my site, there's an area right there on the webpage that you can click to get signed up. So like I said, if you've been enjoying, then definitely get signed up for the free live event. Next one, IOVA. Nice mover today. The price is starting to drop down a little bit as I speak. You can see this last 30 minutes here is starting to drop near the lows. But that's also what makes this interesting, more so from people that like to play pullbacks. So a couple different interesting pullback points. First level here, right here at the bottoms from today, right around $5.10. So this is more so people that like to play potential double bottoms. You have bottom number one here. So if the price comes back down here, that's really the question. Is that going to be the double bottom where the price comes down there and gets the bounce? Again, no guarantees, but that's certainly a valid thought process to have. And then the next level of support, in the event that level doesn't quite hold, would be more so for the gap close people down around $4.80. Do gaps have to close? No. Nothing has to close, or nothing has to happen in the markets. Because think about that. That would imply there are guarantees, and there are no guarantees in the market. So for you pullback players, like I said, a couple different choices: double bottom, gap close. But that's all a matter of your personal preference and strategy. In terms of levels of resistance, all about that pink line there, 200-period moving average, where you can see, again, the power of charts rejected right at that very key moving average. So if there is any sort of recovery, keep an eye on that 200-period moving average. Next one, TSLA Tesla. This one was all over the place today, including a wild opening 30 minutes. I mean, look at that opening 30-minute candle. Price all over the place. Ultimately, though, has dropped down and is sitting down. I guess not necessarily at the lows, because at the lows would be right around there. There is a bit of a bounce, but near the lows. There we go. So overall, though, I'm going to go ahead and make an adjustment here now that we have more data. And again, what direction is this adjustment being made? I'm going to go ahead and adjust this newest area of resistance that I think most people are watching right now to 276.50. Again, a bullish thing whenever levels of resistance are being adjusted in the upwards direction. Still have the key overarching level of support down here at $266. But I do want to add in a near-term level of support, which seems to be right here around that $270.50 mark right there. And that's one of those areas where, once more, there are no guarantees. But if the price were to roll back over, come down to that level and break down through it, I don't think anybody would be shocked to see the price go down there and at least retest 266. But again, that's all dependent on, can the price break through that support right there with a high volume break. But overall, those are going to be the main levels to watch on Tesla for next week. Next one here, ARMM had the IPO on Thursday, and a lot of people talking about it. Good volume once again today. Now, is this a good or bad looking chart? That's a matter of perspective. If you're a day trader, flipper, scalper, and you bought right there and your plan was to buy and sell within 13 minutes, well then yes, from that standpoint, the chart is an absolute train wreck. But if you care about the bigger picture point of view, then the chart does still have the opportunity to build some higher bases, which is why this level here that I talked about yesterday, and again, the power of charts. Look right where the price bounced off of. That line right there that I drew in yesterday's video. So I'll turn that into a quick plug. Go get signed up for that free class. But anyways, so if the price stays above this level, think about what you would have. You'd have a low there. You'd have a low there. you'd have a low there. And emphasis here on the big picture. So from the bigger picture point of view, you'd still have stair-steps progressing in the upwards direction. Again, I fully understand if you're a day trader and you bought right there, you don't care about these stair-steps. That's why I'm trying to distinguish between a bigger picture person and somebody that's more of a day trader. So as far as supports are concerned, nothing new here to report. As far as what I talked about in yesterday's video, you still have the level there at 60.90, and then we'll just call that 58.28.5 down there. In terms of levels of resistance in the very near term now, key level right here at that level, let's just call it $65.50. So keep an eye on that if there is any sort of bounce back upwards. But yeah, there was a pullback today, but in all actuality, for you pattern players, yes, pullback here, no doubt about it. But then if I add in what happened before there, put the golf hole down here, we have ourselves a bull pennant pattern. Next one, AMD, a very, very rough day today, not necessarily because it was a red day, but just from a technical point of view, the price violated an area that up until this point had been doing a fantastic job of holding strong. Case in point, this 103.15 mark, which you can see back here, did a fantastic job of holding strong, held strong again right there. Try to hold strong right there, but eventually the price broke below it. And at that point, that is where the update comes into play. When levels of support are broken and closed below, they tend to act as resistance. And I'm going to zoom in here so you can see a little bit better. And that is exactly what happened here. Price broke down below that level. And then you can see the price try to recover and bounce back upwards. And then generally speaking, it didn't hit it exactly, but definitely within the general range. You can see that level turn from a support into a resistance and rejected the price back down. That does not mean that the price can never, ever get back above that area. I'm just saying that makes sense why the price did get rejected at that area. But also the second point is if the price does try to curl back upwards, that is where the big battleground resides. That's where the big question mark is. Can the price break up through 103.15? So keep an eye on that if the price does try to bounce. In terms of levels of support now, as you're seeing here, been a while since the price has been down around this part of the chart. Which is, making things a bit hard to see, but we have to go back quite a bit in the chart's history with the next key level of support now to watch next week right there at $100.85. So 185 next key level of support if this downwards move continues. But yeah, no doubt about it. For it to break down below that 103.15 mark is a relatively bearish sign. Next one, TQQQ, which is an ETF that measures the NASDAQ market. So if you believe the NASDAQ market is going to rise, this one will also rise. It just allows you access at a much lower price point, which makes it a very popular ETF. So yes, NASDAQ today had a very, very rough day, as I'm sure you're aware. Therefore, this one also had a very rough day, and a lot of updates need to be made. In fact, first I'm going to do is just some house cleaning, get these lines out of here. Sure, they're still, they still pertain to the chart. They're just not relevant right now, given how far down the price did go. But the first key dynamic that the price has violated, and why I would consider this a bearish day. Now, yes, it was bearish just because it was a big red day, but technically speaking, extra bearish because the price is now broken down below that pink line, the 200 period moving average, which was a good solid area of support. You can see right there a couple of times acted as support right there, but that did not hold up here. Try to get back above it right there, but again, classic example of that support acting as resistance, and then just continuation back to the downside. So if there is any sort of attempted bounce, then yes, that pink line there, and actually the purple line not that far away. So it's almost a little kind of party right there amongst the two moving averages are going to be the main area of resistance that are going to try to prevent any sort of bounce from coming back up. Again, I'm not saying that a bounce can happen. I'm just saying that if a bounce does occur, then right up around that area, the bulls are definitely going to have to bring their A game. In terms of areas of resistance, key level here, key level support. Key level of support that you got to think everybody and their brother's uncle is going to be watching because it essentially held today right down here around $39.40. In fact, you can't see it. There we go. My ugly mug was in the way. But right here, you can see price found support. And then even today, basically found support. So it becomes a very valid question throughout there is this some sort of double bottom that is forming? May not be. That's why risk management matters. But to be fair, that is a two-sided coin because, well, maybe it is. And maybe this thing's getting ready to bounce back upwards. So that's where risk management matters because from a risk-reward scenario, you could be looking at a good, solid upside potential relative to the risk being taken. So that wraps up the top 10 list. Again, if you like what you saw here, then I want you to get signed up for that free training. It'll be next week, Thursday, September 21st at 7 p.m. Eastern Time. So I hope to see you there. As far as the top 10 videos are concerned, if you enjoy these, please do two things for me. Hit that like button, leave a comment below. Say what you traded today. Tell me what you're watching next week. Say hi. Those two things really help out the channel, help out these videos. And as long as I continue to see people participating, then I'll continue to get this content out to you. So again, hit that like button, leave a comment down below. Go get signed up for that free class. Take care, have a good one, and have a great weekend.